In this video, we're going to look at some other specialty kinds of questions with respect to the time value of money. In the time value of money workbook, at the bottom, if you see the tabs at the bottom, there's the time value of money. There is a tab that talks about mixed cash flows, loan analysis, and educational needs analysis. So let's first take a look at the time value of mixed cash flows. So when you click on that button, okay, so now we have this worksheet. Again, as with all worksheets, the yellow boxes are data points. The blue boxes contain answers to our questions. So let's assume we're going to invest in a project. And this project is going to bring us $1,500 the first 2 years, $2,000 the next 2 years, and $5,000 in year 5. So this is our project, has a 5-year life. These are the cash flows that we expect to get in the future. What we need to identify then is what is the discount rate or the required return on this particular investment. So let's say it's a 10% discount rate. And of course, we have 5 years of cash flows. So what we have here, if we look now at the answers, we have a couple of answers that we can talk about. We can talk about something called the present value of future cash flows. So what this essentially does is it takes each one of these cash flows, calculates its time value, where time equals 0, much like we talked about in the time value of money present value worksheet or worksheet video, and then it adds them all up. So the sum of all of these cash flows in present value terms is $8,576.57. Now, one of the things I need for you to kind of understand a little bit is that Excel they don't use the finance term of net present value as we do in corporate finance. Net present value, that formula calculates the present value of these cash flows starting at year 1. The net present value calculation, in sense of corporate finance, that term, we need to take the present value minus investment. So we'll talk about that in a second. The other thing that we can calculate or talk about is, what is the company going to do with these cash flows when they receive it? And of course, we would hope that they would reinvest it. So if they receive these cash flows and reinvest it, that is what's going to end up being the future value of the cash flows. So this ultimately then just takes each one of these cash flows and moves it forward in time. So in this case, this cash flow, this future value of the cash flows, it would be worth $13,812 and some 65 cents. So what other questions can we answer or ask? We could obviously change the discount rate. That's really not all that earth-shaking. What we want to talk about is, since this is a corporate project, what does it cost to do this project? Let's assume that it costs $8,000 to do this project. Now, we need to have this $8,000. It needs to go in as a negative number, remember, because we are investing. That's a cash outflow. So if this costs $8,000, the value of the project is $8,576. The net present value, this is the corporate finance term for valuing a project, is $576. So you gained $8,576. it cost you $8,000 to get that, so you were left over with $576. And of course, this is money that's left over after we've paid for the project. So all of this value accrues to the shareholders, the owners of the company. So this is actually a measure of the increase in value of the company, this net present value. In addition, when we put this investment in here, we can then also calculate the internal rate of return, which is the actual return on this project if we spend $8,000 and we exactly get these cash flows into the future. So in this case, we would earn 12.28%. And of course, the required return of the discount was 10%. So if we wanted to get 10 and we think we'll get 12, then obviously this is a good project to do. So again, this is the process of calculating the time value questions that we may have to answer for a cash flow stream that is not equal. And it only does 20 years. Of course, if you wanted to do more, you could add columns. But of course, you would have to change the formulas here so that you can incorporate more rows in your analysis. So that's the mixed cash flow stream for time value of money.